Coming up on Market to Market, trying to sort the wheat from the chaff on new farm tax policy, and a lucrative export commodity rooted in the upper Midwest. Those stories and market analysis with Angie Setzer next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, January 12 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. As you and I were checking off a few items from our Christmas list, hoping to make a wish come true for someone special, we were helping fulfill dreams of a different sort. Retail sales rose 0.4% in December, adding the 0.9% increase in November, and it made for the best holiday retail season in 12 years. Online shopping grew by 11.5%. Inflation for all of 2017 climbed 2.1%. When food and energy are taken out of the equation, the annual inflation rate rose 1.8%, matching 2016. And there is little doubt earning the money to make dreams come true for Christmas 2018 are happening under a new set of rules. Accountants are still reeling over what the Tax Cuts and Jobs Act means for their rural customers. Peter Tubbs takes a closer look.
Changes to the federal tax structure put in motion by President Trump's signature last December will not only affect purchases that farmers and ranchers make in 2018, but could also affect who they sell their grain to. According to many tax accountants, the immediate bonus for farmers will be an allowance for the full depreciation of equipment purchased after September 27th of 2017. Full depreciation will be allowed for the next 5 years until being phased out in 2026. Used equipment is also eligible for the deduction. Additionally, the new law allows joint households to deduct 20% of pass-through income below $315,000. Anything above that mark will require additional calculations. The deduction limit has been doubled to $1 million per year, and that limit phases out as operations reach a $2.5 million cap. To avoid returning to these reset limits, both numbers are now indexed to inflation. An obscure corner of the tax code saw one deduction repealed, only to be replaced with another. The Domestic Production Activities Deduction, or DPAD, also known as Section 199, has been replaced with Section 199A. DPAD was originally designed to encourage domestic manufacturing, but was used mostly by software and entertainment companies. For agriculture, DPAD allowed cooperatives to deduct 9% of their taxable income and pass shares of the deduction to their members. The new Section 199A allows for a 20% deduction for grain sales to a cooperative by its members. Depending on the producer's tax bracket, the deduction could result in reducing their burden from 5 to 20 cents per bushel. Private grain buyers, like Cargill or ADM, are concerned access to crops will become more difficult. Congress may attempt to adjust the terms of the deduction to remove the incentive, which could trigger a 60-vote minimum for passage in the Senate. No Democrats voted for the tax plan when it passed along party lines in late December. Friday, the USDA stated that the benefit is an unintended consequence of the new tax law and has asked Congress to address the loophole in the current session. From Market to Market, I'm Peter Tubbs.
Next week, NAFTA negotiators will sit down to continue a trade battle with an unknown outcome. President Trump, who has famously called for scrapping the 23-year-old treaty, now says he prefers a deal. U.S. row crop farmers are stuck watching from the wings to see whether their record corn and soybean production will have open roads to foreign ports. However, one upper Midwest crop has long found a path to prosperity in a world awash in grain. Josh Bittner has more in our cover story.
Wisconsin might be known as America's dairyland, but another commodity rooted in the Badger State since before the nation's existence holds a long history of lucrative returns from Asian export markets.
Ginseng has traditionally been used in both cooking and as a medicine. A lot of Chinese practice and culture believes that food is a medicine. And so the items you consume impact your bodily health. I think as Westerners, we're just starting to discover that based on our diet.
Will Su is a second-generation ginseng producer near Wausau. 95% of the plant's domestic cultivated origin is sprinkled across Wisconsin, according to USDA, and Marathon County is the hub.
Very similar to France and Italy, which are known as the Old World regions for growing wine. That taste and flavor of Wisconsin ginseng has been ingrained in people for the last 100 years.
State estimates indicate roughly 1 million raw pounds of ginseng are harvested laboriously across Wisconsin every year, representing an over $50 million industry. And some say retail sales can boost profits exponentially.
Well, I'm the farmer, he's the brain, so work out as a team is very good. Each nut just is 1 year old.
Originally from Taiwan, Will's father, Paul Su, founded the core of the family business over 40 years ago when he and his wife discovered unmet demand for the niche product in Asian American communities across the U.S. The Su's enterprise now includes several hundred acres under production with nearly 1,000 employees across the globe.
Chinese real warm, it's hot, yang, and American ginseng in. So there's the two different functions, two species.
Panax ginseng was discovered in China's Manchuria region thousands of years ago, but the popular panacea eventually fell victim to overharvest. However, in the 1700s, Jesuit missionaries followed the thread from Asia to North America along the 45th parallel to Panax quinquefolius, a cousin plant with similar cure-all claims among some Native American tribes.
You don't always find four prongs.
Then around the dawn of the 20th century, the wild root moved from forest to farm in Wisconsin, cemented trade partnerships, and earned a gold standard reputation.
85% of our market is China. So yeah, it's tied in, it's hardwired.
Bob Kaldunsky heads up the state's Ginseng Board, a quasi-governmental promotion group of active producers funded through shade assessment, a tax on the farm structures that help mimic woods-like conditions for the fickle herb. Despite strong demand, Kaldunsky says the number of ginseng growers in Wisconsin has declined from over 1,000 20 years ago to about 180 today.
There's 5 producers that produce about 75% of the crop. And the balance then, that's about 175, produce the other 25%.
This consolidation could be attributed to discouraging infrastructure expenses, time, and land challenges.
3 to 5 years normally before we harvest, and we don't plant on the same land twice.
Ever.
Because cultivated ginseng only grows in a particular location once, large producers must constantly secure new cropland. But the Sioux say successive owners can reap the benefits of ginseng's one-shot deal.
What most farmers typically find is after we're on the land, it's in a better state than it was before, especially to grow, some of the cash crops that are more typical here in central Wisconsin.
Growers don't expect the reality of finite land to brew into a crisis anytime soon, but sustainability could be as close as the edge of the field.
I've been training the digger for 30 years, at least maybe 35 years. We give them top price, so they only pick mature plant and also dig in certain time and certain size.
By state law, the original wild woods-grown ginseng must be at least 10 years old before being extracted for sale. Properly licensed by the state, anyone can dig into Wisconsin's private lands with permission during the months of September and October. And dealers say wild root commands much more than the average $30 to $55 per pound off the farm.
Depending on what location, how good they are, $500, $600, $700 a pound.
That's because the older the root, the higher the number of ginsenosides, active compounds within the plant that impart its elixir-like prestige. Private landowners like the Sioux recognize the importance of conservation, developing their own method, Wild Simulated, as part of the state's multi-pronged approach to viability.
So this is kind of that in-between space, not quite wild, not quite farm-raised, that you see a lot of agriculture moving into. You can take any patch of woods, if you take care of it and do a good job of it, and turn it into this. And in the wild, some of the best roots are, 15 to 30 years old.
So this is at least 40 years, maybe more than 40. Very, very seldom you have 60-year-old roots, maybe one in 100 to 1,000. But 100 years or older, I only found 2 in 43 years. I have one, and Jack Ma from Alibaba, I gave him one.
Over the years, Paul Sioux has forged connections with politicians and high-profile business people who swear by the economic and health benefits of ginseng.
What it's going to dry down to and how much of it's going to be usable.
And while producers brush off concerns over trade bluster out of Washington, some do offer a word of caution.
History has shown times where trade to China has been shut down. This industry is dead. The demand as income levels rise in Asia is really coming from there. So to help farmers in central Wisconsin, the best thing we can have is access to those export markets.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Lackluster exports churned with South American weather before traders began treading water in anticipation of 2 major reports released during the final session. For the week, March wheat lost a dime while the nearby corn contract fell a nickel. The realities of USDA reports and Argentine weather coupled with increased Brazilian yields dropped the March soybean contract a dime. March meal went down $4.90 per ton. March cotton stretched higher by $3.67 per hundredweight. Over in the dairy parlor, February Class 3 milk future soured 38 cents. Livestock had a mixed week. The February live cattle contract finished $1.87 lower, struggling to recover from last week's losses. Nearby feeders put on 67 cents. The February lean hog contract seesawed through a $3 week, gaining back 15 cents. The U.S. dollar index went back into a dive as it ticked 95 points lower. Cold weather helped crude oil cap a 3-week run over $60 as the February contract pumped $2.86 per barrel higher. COMEX gold poured on an additional $12.60 per ounce, and the Goldman Sachs commodity index ratcheted just over 10 points higher to close at 443.70. Here now to lend us her insight on these and other trends is one of our regular market analysts, Angie Setzer. And in case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcasts online anytime at iptv.org/MTOM. Angie Setzer, welcome back to the table.
Thanks for having me.
Too bad there's nothing to talk about this week. Thanks for making the trip. We'll see you next time.
That's what I'm supposed to shrug and say, see you later, is what I was advised. So.
Yes, exactly. If anything but that. Now, we're going to have a big discussion about the USDA report that came out on Friday. But let's give people just a little bit of context on why we're going to spend so much time on that. And that goes to one of the Twitter followers. We thank you so much. In fact, we had 2 pages of Twitter questions and Facebook posts, so thank you very much. We're going to start with Nathan in Fort Recovery, Ohio, and he's asking, well, first he wants to address some of the big names. Cutting the report down is useless. We won't name names. If the numbers are so fake, why does almost everyone put up a yield guess and everyone glue their eyes to computer screens at the release?
That's the thing. The numbers aren't fake. You know, they really aren't. I mean, there's no other source of information as comprehensive as what the USDA is. It's easy to say we wish we didn't have these reports, especially when they cause negative market impact. But we're not too far removed from the October that never happened, where the government was shut down. We had no October report, and we just sat and kind of languished side to side. I mean, of course, we're doing that right now, it seems, with market. No matter what kind of information you get, we aren't necessarily moving dramatically one way or the other. But the fact is the USDA compiles information. They do it the best way they know how.
Right.
They do it, like I said, they're the most comprehensive. And I would hate to see if we were to remove them and we would have to rely on the private estimates that we've seen, because all you have to do is look at the trade range in guesses prior to a report to get a feel for what kind of wide ideas we would have about what's actually out there. And based on where the cash market is right now, basis spreads, things of that nature, the numbers that the USDA are putting out are relatively accurate, whether we want to put them down to the 10th of a percentage point or not.
Well, let's get into some of those. Let's talk about wheat right off the bat here, Angie. And they were off 12 3/4 cents just today for the week. They had been relatively flat. Yeah. Why?
We'd actually seen somewhat of a recovery in wheat simply because we were anticipating a significant reduction in wheat acreage. We were expecting to see the lowest winter wheat acreage on record. I was also in that club that I thought we would see that. The USDA came out today and said, nope, it's not. We're barely off from a year ago. We've seen some reasonable increases in areas we thought we would see reductions winter wheat-wise. So we had that. Ending stocks were actually raised slightly as well. They reduced exports and feed usage slightly in the report. Exports were offset. They increased soft exports and decreased hard, but in any event, you saw a reduction in feed usage, and so it made for higher carryout and an increase in ending stocks that no one was really anticipating to see, unfortunately. So we kind of got a double whammy. I went into the report thinking that would be the market that would save us, and the USDA told me to go sit down in the corner and think about what I'd said. So.
Right. You watch your language when you do that.
Yeah.
Up or down, can this thing go much lower real quick?
To me, I think we found support. It could try to test that $4 mark on the front month, but it seems to be gravitating towards the $4.20 in Chicago.
All right, another question. If you want to, you wrote at Goddess of Grain. You can find us at Market to Market. And Angie, they were asking, this is Andrew in Nebraska, and this is a question I think many people have. And he's asking, we have record on-farm stocks laying around, and the total is the highest since '89. Stocks to usage highest since 04-05. If you don't have much sold but need to move bags by March, what do you do?
Time is of the essence. And so if you look at quarterly stocks today that were released from December 1st, you saw that most areas except for Iowa and Michigan actually have more grain on hand or similar amounts to what they had a year ago. So to me, I think you can almost anticipate the same things to happen in basis. Basis is a function of local supply and demand. So of course, if your supply is greater than your demand, which we know it is because we have 2.477 billion bushel of corn left over at the end of this marketing year, you want to be looking at selling before your neighbor is selling. There's a lot of conversation that, oh, well, my local ethanol plant's pulling in piles or something of that nature. You know, obviously they really need corn. Well, true, a lot of farmers have held back. We have the highest amount of corn on loan that we've had since 2008, which is the inception of those numbers being released. So guys or folks or, you know, farmers out there have found a way to cover their cash flow needs in the short term, but eventually that grain's going to have to move. And sometimes being in front of that freight train is not necessarily a negative thing when it comes to having grain that you know you have to move from a quality standpoint.
Record large crop. Is it too cheap right now? And can it go lower?
Everything can always go lower. I don't necessarily think it's too cheap. I think we've found an equilibrium in price, unfortunately. Okay. It's boring to watch, but I think it is where it is. We have a lot going on. I think today's report, you know, didn't really, I can't say it was bullish, of course, but I can't necessarily say it was bearish. The one thing it did is it got that boogeyman, you know, when you were scared as a kid and your parents came in and flipped on the light and it was just a curtain casting a shadow. That's where we're at right now. This report's gone. The boogeyman's out from under our bed. We have nothing looming that could be considered incredibly bearish anytime soon, which which could allow some folks to come back in and start buying. We've got those positives out there. Metals are up big. The commodity index is going up. Crude's higher. You know, we've got some things out there that would indicate that people may want to come in and start buying again those things that hurt when you drop them on your toe.
Right.
And corn and wheat and beans
would be one of those.
Would be one of those.
All right. Speaking of beans, they were up 10.5 just today, but really they were down 20 cents going into today. What do we need to do with soybeans? Is it time to make a sale?
Soybeans are rough. New crop beans I mean, everything's difficult right now. If you have old crop beans and you're paying commercial storage, you've got to be aware of what's going on in South America. The Brazilian crop is huge. Today, you know, we were able to really kind of take and absorb a really large export projection cut. The USDA cut our expected exports 65 million bushel. It took us to below last year's numbers. So we can kind of lose that storyline of, oh, exports, you know, they're telling us that we're going to be bigger and we're less and blah, blah, blah. But the reality is the Brazilian crop continues to get larger expectations that way. The Argentine crop may get a little bit smaller, but that impacts meal in the global market more so than whole beans. Brazil is our biggest export competitor and they'll continue to be that way. So to continue to pay bean commercial storage especially and hope for something to happen is going to be very difficult. New crop beans closed just under $9.85 on the November today. I've been saying for quite some time anything above $9.85 towards that $10 mark you have to be looking at. Unfortunately for a lot of folks that may be below the cost of production, and so there's some tough decisions that have to be made about rotation and things like that.
We have one of those questions that we will get to in Twitter and in Market Plus. And another thing we'll get in Market Plus is talk about that cotton market that's had a really good week. But we need to get to the animals a little bit. Let's talk livestock cattle. Kind of in a choppy market in this area. Is it weaker sales that is the big thing? Packer demand, where are we at? What's causing this?
We've seen the cash market kind of take a little bit of a hit. It seems like there was this big conversation about do you front run? Do you know, when the cash market improves, do you bring a bunch of cattle into the marketplace? And I think we saw that. I think we saw Packer needs get filled, and so they slammed cash cattle prices down $2-3, you know, in one foul swoop. The hardest thing right now with fats is that you're seeing lower highs and lower lows. And so that could indicate a little bit of perhaps a downward trend as we move forward. But the fact remains demand is huge. And I think we're going to chew through some of these supplies that we've seen. Everyone likes to talk about the increase in placements and things like that. But we're working our way through the fire cattle, the weather cattle that were brought into feed yards and things like that. So if we start to see some of this on-feed numbers, if these on-feed numbers start to move a little bit lower, then I think we'll realize that the supply isn't perhaps as burdensome as anticipated, and hopefully we'll find a bottom here. But for the time being, we're going to be pretty choppy back and forth.
So the same, we kind of covered feeders a little bit graphically there while you were discussing. Do you buy that there is, I mean, positive on the week, but are you thinking bearish tendencies are forming in that market as well?
Not necessarily. I think the USDA indicated that demand's going to continue. They anticipate supply will continue, but I think the fact remains if we can find a equilibrium in cash value and get these rally opportunities that are showing up that seem to be relatively common, people are still going to want to be owning these feeders. And that's the thing is once you get a taste for beef, it doesn't go away.
Right.
You know, and if we can continue to see into our export market and see that continued pace, then we'll see that form support underneath the cash, which will continue to drive those feeders, you know, at least keep them supported, if not push them higher as we move ahead.
All right, hog market as we close out here. November 17, the value of exports, it was a record. Is that what's pushing that market lower, kind of taking some profit, or what's happened?
Well, we saw the hog market really kind of work its way higher and higher and higher. I think I've always told my customers that you can't build a house of cards straight up. It tends to fall. And so to have a little bit of correction in that market, I don't think was a bad thing. Cash values remain supported and continue to firm. Demand is huge. You know, of course, our kill pace is reasonable. We could see a little bit of a downturn in the short term, but I think long term we've found some support. The worst thing with hogs, everyone always asks me, should I protect my downside? And I think anyone that's been in the hog market for more than a year understands that you always protect your downside in hogs, because you can wake up on a Tuesday and for no apparent reason we can be into a downtrend that is severe and you know, very, very hurtful. So it's something to be aware of. Hogs have been moving higher. Value is good. Demand is there. You know, our export demand is solid and will continue to be as such. But we just want to make sure that if you have some significant risk out into the deferreds, you know, you're not completely completely riding that to see what happens in the next turn. It's just like in anything else. If you have profit on the table, definitely take a little bit off so you aren't completely gambling on the come.
All right, you get to answer this question, yes or no. Is the dollar going lower?
Maybe.
Maybe. It's a firm middle. Thank you, Angie. Appreciate the time.
Thank you.
All right, that will do it for the broadcast portion of this television program we call Market to Market. However, we will keep the conversation going, including answering more of your questions. We got a lot of them during our Market Plus segment, which is available podcast and video form on our website. And while you're there, check out the link to our Flipboard magazine. It's the Market to Market reading material. Each day, our producers update the collection of news that they are reading and put it in one convenient location just for you. Join us again next week when we'll explore the fight to rescue those swept away by the opioid epidemic in rural America. So until then, thanks for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.